The broadcast is now starting. All attendees are in listen-only mode.
All right, all right. Hello, everyone. My name is Danielle Byrd. Thank you for joining us for this webinar today. I am so elated to be able to have a nice chat with you today all about home ownership and the home buying process. And I have Brian Sachs with Homebridge Financial on with me today. How are you, Brian?
I'm doing great and honored to be here, Dani.
Likewise. Again, my name is Danielle, and I am a realtor and a sales specialist with the Saphire Home Group. My brokerage is Keller Williams Legacy in Towson, Maryland. And I know that a lot of people have questions about home buying, what the process is like, and you have a lot of questions. So today I think is a perfect opportunity for us to kind of debunk some of these myths and give you the real scoop on what the whole process is like from start to finish. If you have any questions, feel free to post them in the chat and we will make sure to try and answer them when we get a break in between slides. All right, so we'll start off with answering the question, why do you need a buyer's agent? Well, first, I think we definitely should touch on the fact that to hire a buyer's agent costs you $0. Brian, is that true or true?
It's absolutely true. What a great number. It's the best number out there, 0.
It really is. So yes, it definitely costs you nothing to hire a buyer's agent or have a consultation with them. So we want to go over a few points that you definitely want your own representation. And what that means is if you were riding down the street and you saw a sign in front of a property, and let's just say that the address is 123 Main Street. And if you called the number for the agent that is on that sign, that agent can assist you, but they cannot work for you. And the reason for that is because they have already been hired by the seller. So when you have your own agent, they are able to represent you in your best interest and negotiate on your behalf. So that's why you definitely want to hire an agent to work for you. Also, when you start working with an agent, you want to establish your home buying goals. They're going to help you get pre-approved for a loan with a lender that is proven to getting clients to the table. And the type of loan you get may determine what type of home. It's based on your home choice. That agent is going to view homes with you. They're going to go over the comps in the neighborhood and what the market is looking like to help you come up with a strategy for putting your offer together. They're going to write your contracts and make an offer on your behalf and explain all of the terms of the contract. Negotiate the best terms and prices for you based on the market and the property. Financing application and offer accepted. That's when you get your contract and it's signed by everyone. Once it's signed off by everyone, you get the property inspected. If there are any repairs that need to be negotiated, the agent takes care of that for you. Any other contingencies with your loan, they help you work through that. The lender is going to help take care of getting an appraisal done, but they're also going to make sure that they remind you to set up BGE in your name, helping you with resources for moving companies, all kinds of things. They're also going to be able to answer all of your questions and explain all of the necessary and different steps and documents that you have to provide. They assist you with a final walkthrough before settlement to make sure that the house is in the same condition it was in when you went under contract. And then you get with a title company of your choice, and that's when you have settlement and sign your papers.
Dani, I just want to jump in here. I had clients recently and they went to an open house and they didn't realize, and they went there not being represented, which is what you said, which was an enormous mistake, especially because it cost you 0. Mm-hmm. But I want to kind of drive it home even further. That agent sitting in the open house probably is very knowledgeable, sweet, and wonderful, but they represent the seller. The seller is paying for them to represent them. So saying that is fine, but let's go deeper into what that actually means, because this is what happened with my client. They went in, they said to the agent in there, we love this house. We're willing to, we want to offer 280, but we're willing to go up to 310. And so do you know what that agent has to do? Legally has to do. That agent legally has to go to that seller and they have to say, Mr. Seller or Mrs. Seller, do not accept this contract. The buyers verbally told me that they're willing to go to 310 and this contract is for 280, right? And so you want someone that represents you, as Dani said. You said it very well. You want an agent that is a buyer's agent that represents you and your best interests so that a situation like that doesn't happen. And I don't know too many better buyer's agents than Danielle Byrd. So very, very good. I'll let you continue. I'm sorry I interrupted, Dani.
No, that was a great point because people don't realize that. And also, I know even some agents don't realize it, but if you meet anyone and you're just having a random conversation with them, if they have not signed an agency agreement to officially hire you, no matter what, we work for the seller or represent the seller until someone actually hires you by signing that agency agreement. So some people get a little freaked out when we say, hey, I really need you to sign this agreement. But I mean, it's protecting you.
Absolutely.
It's protecting you so that we're able to negotiate and nitpick on your behalf. And that way, if we knew that they were willing to go as high as 310, but they were starting at 280, we would keep, that would be between me and the client.
Absolutely.
I'm not going to show my hand. My job is to say, hey, we've got 280. This is what we got, and try to make that work. Yep. So I'm glad you pointed that out because that is an excellent point.
Beautiful. All right. So anything else, Dani, before I jump in?
Well, I think it's a perfect time for you to jump in because, I mean, like you and I know, we can only go but so far in a consultation. And then at that point, it's like, yeah, you know what? I think you're ready to talk to a lender. I'm going to turn you over to a lender. And once they get you in position with a pre-approval letter and your financial situation, that's when I'll step back in. So I'll give you the floor.
All right. Well, it's very much a team effort. Your lender and your realtor, they work hand in hand together to make sure you have not only the best experience, but are getting a great price on the home, have the best terms on a mortgage, the best product, the best program. So I'm sure you're here because you want to stop renting. And I'm thrilled that everyone is joining us. So I'm going to jump in. Maybe we'll start with just sharing with you what we're going to share with you. And we're going to talk about 3 different types of lenders and which one is best for you. I often hear clients I speak with that, they say, well, I spoke to 3 lenders and I got 3 different answers. Well, how does that happen? So we'll explain that. We're going to explain how to get more take-home pay to make your mortgage payment more comfortable. We're going to go over the various types of financing and which one is best for you. And I'm going to pause here for a second because, invariably, when you're looking for a home and you're excited, you're going to talk to your friends, you're going to talk to your family, you're going to talk to your coworkers, you're going to talk to your neighbors, and all of them are going to tell you, well, you should do this and you should do that. And why didn't you look into this or why didn't you look into that? And the truth is, everyone's heart is in the right place, but everyone's situation and even their goals and comfort levels are very different. And so that's why meeting with a lender and getting pre-approved and really discussing all the pros and cons of the various products and programs really is so important. We're also going to cover how to buy a home even if you don't have perfect credit. And Dani, I heard an interesting statistic. I heard a statistic that 60 some percent, I think it was 62 or 63% of Americans have a credit score of 660 or below. So a big myth, you have to have perfect credit. I rarely see, maybe 1 out of 100 applications, somebody has perfect credit. So, life happens. And sometimes while it's very, very good to talk about what to do, I want to make sure, and I know you do as well, Dani, we want to make sure that we expose you to the mistakes to avoid when you're buying a home. Sometimes that's even more important. And we're going to share one document that totally will increase your negotiating power. So let's begin by just figuring out why people rent to begin with. And I found that there are really 5 reasons. Number one, maybe you're new to the area, just trying to get your bearings and figure out what areas you like, what areas you don't like. Or maybe you feel you may not have enough money for down payment and closing costs. We got to fix for that, right? Maybe you've had past credit issues.
Yeah.
We got to fix for that too. Maybe you think it's too hard to qualify for a mortgage. Dani and I have a fix for that. And you think you can't afford a mortgage payment. So those of you that are on and with us right now, just tuck this away in the back of your head for a minute. How would you like to know about a program where other people make your mortgage payment for you? And that, you heard that right, by the way. I'm going to share with you a loophole that would allow you to generate an extra income owning a home and have other people make your mortgage payment. So stay tuned. So who am I? It's important. You really need to understand who you're listening to. I have been in the industry for 37 years. I've probably helped now close to 6,000 families become homeowners. And I don't tell you that to brag. I actually wrote the book on helping folks who have a credit challenge get into a home called Yes, You Can Get a Mortgage. It was a bestseller on Amazon. And I'm also the in-house, if I sound familiar or look familiar, it's a terrible pose, isn't it? It's a side view. I don't like that. But in any case, I've been the in-house mortgage expert for Channel 11 WBAL TV for over 20 some years. Again, I'm not saying any of this to brag. I just want you to understand that who you're listening to and why it's worthwhile to listen. So let's start talking about the products and the programs. There are so many misconceptions about products and programs. And the way we find out if this product or program is correct for you is actually to align. Well, before we align, we have to figure out what your goals are. What are your comfort levels in terms of cash? What are your comfort levels in terms of monthly payment? And then we make recommendations. So this is really just meant to be an overview for you to get an idea of what's out there. There are FHA loans. This is the Federal Housing Administration. The benefit is that the down payment is only 3.5%. They allow you to qualify for a little bit larger home purchase. They're a little bit more liberal with credit issues. And the con is that the FHA does have a double mortgage insurance. That's insurance that protects the lender in case a borrower doesn't pay. The appraisal standards are a little bit stricter, and I'm not sure that's a con. That may be a pro. But they're going to go over the house with a little bit more of a fine tooth comb. And that may be a reason why some sellers, don't necessarily prefer an FHA contract. There is also the VA loan. And if you're a veteran, I thank you for your service. A VA loan is really probably one of the best products out there. And it should be, because we should give back to those who have defended and protected our country. If you have VA eligibility, that means that you have been either on active duty or you have spent 6 years in the reserves. You're eligible for a loan with no money down, and very liberal with credit, very liberal with how much home you can purchase. And then we have just the standard conventional loan. Generally, you can put down 5%, but we do have some products that will allow you to put down 3%. If you put down less than 20%, you will have what's called mortgage insurance. The cons for a conventional loan, the qualifying ratios are a little stricter, meaning you're going to qualify for potentially a little less home than FHA or VA. But the appraisal guidelines are a little easier. So are you finding it's easier, Dani, to get conventional contracts accepted than FHA?
Absolutely.
Yeah. But,
I have actually seen some listings that say that they don't want FHA offers at all, which I'm like, geez, so conventional offers have been winning from what I see.
Right. But, if FHA is the product you're going to use, don't get discouraged. It just means you may have to, put in a few more offers than normal. I'm going to stop here for a second, Dani. We're in Baltimore, and who's famous and is from Baltimore? Babe Ruth, right? And Babe Ruth was the home run king, right? And what few people know is that Babe Ruth was also the strikeout king. And the reason I mention that is because, in certain markets, and as we're recording this, we're a little bit more in a seller's market than a buyer's market, meaning there are more buyers in the market right now. And that's always constantly in flux, that's always changing. But you got to go into this with the mindset that you may have to put in a few offers before you actually have one accepted. And you have to leave yourself enough time for that as well. So, just keep that in mind. There's also another program that I didn't create a slide for, but I'll mention, and that is the USDA program. And the USDA program is for homes that are rural, meaning there's nothing in Baltimore City and there's nothing in Baltimore County. We could be talking about homes that might be in Cecil County, the far reaches of Frederick County, Western Maryland, parts of Carroll and Harford. So the USDA program, there are income limits, and again, the home has to be eligible. But if you want to live in a rural home, that might be a great area for you to explore. The USDA allows you to put no money down as well. So let's talk about this. Myth number one, I don't have enough cash. Right before we jumped onto this session, I was speaking to a buyer, Dani, and this buyer had gone to Zillow or Redfin, I forget which, or Realtor.com, and they were looking at the payment that was provided for a house. And they said to me, why is my payment so different from the one they see online? Well, the one online is based on you putting 20% down. Well, most people don't have 20% to put down on a house. So how much do you need down? Well, we just talked about it. If you're a veteran, 0 down. USDA, 0 down. Conventional, we could do with as little as 3% down. So again, don't listen to people telling you you have to put 20% down. It's not true. When you're buying a home, I want you to think about two buckets in front of you, okay? And one bucket is your down payment, which we just talked about. The second bucket is what's called closing costs. And closing costs in Maryland average about 4 to 4.5% of the purchase price. And again, we talked about down payments going from 0 to 3 to 5%, depending on the program. Closing costs are completely separate. That's why I want you to think about two separate buckets. Lender charges make up closing costs. That's usually appraisal, credit report, underwriting and processing fees. Then there are title company fees. The title company is going to go out and research the title. They're going to conduct the settlement. They're going to pay off the owner's current mortgage. They are going to make sure the taxes are paid, and they're going to issue what's called title insurance. And then there are prepaid items. And you're going to need to set up an escrow account, we call it, for property taxes, for insurance. And I want to give everybody a little tip here, because I know some people try to coordinate moving out of a rental into a property timing wise. So if you were to settle on a home in June, you would not make a payment to the mortgage company in July, and your first mortgage payment will be due August 1st. So you actually skip a month. And I think that's important to mention. So how do you get money if you don't have
I
money?
did mention that.
Go ahead. I'm sorry. What'd you say, Dani?
No, I'm really glad you mentioned that, because people do worry about that, and it comes up often. So I'm glad you pointed that out.
Yeah, absolutely. It's an important point to actually strategize so you're not making two payments, right? So what do you do if you don't have enough money? Well, oftentimes people are getting a gift from a relative. Did you know that a lender can actually give you some money towards closing costs? That's a possibility. There are grants out there. There are secured loans out there. The state of Maryland, Baltimore City, Baltimore County, almost every jurisdiction in Maryland has help. And sometimes we can structure it. And Dani, I got to say, hats off to you, because you are truly, in my experiences with you, an expert negotiator. Sometimes we can have the seller help towards closing costs, but you really want to use that as a last resort, especially when there are now multiple offers on properties. You want to make it as simple for the seller as possible. And some people right now are getting tax refunds, and there's all sorts of ways. I'm just going to go back to this for a second. You could borrow from your 401k. Do you know why it's great to borrow from your 401k? Because if you're borrowing from your 401k, you are borrowing from the best person you could possibly borrow from, which is you, right? It's your money and you're paying yourself back, which is a beautiful thing. So myth number 2, I can't buy a home because I don't have perfect credit. Well, a few people do. What's the minimum credit score? Well, all those answers are correct. 640, 580, 750. It depends on the product. It depends on the program. And actually, it also depends on the institution you're working with. Some of the banks tend to be a little bit more conservative in their lending and credit guidelines than a mortgage banker might be. But here's one I always see, and I know you see this too, Dani, right? People will go to Credit Karma. They'll go to, maybe their credit card gives them a payment, a snapshot of their credit score. Maybe their bank gives them a snapshot of their credit score. So I want to put this myth to bed right now. 2 myths, actually, because I actually have clients that call me and go, you can't run my credit. It's going to destroy my credit. So let's talk about that one first. When a mortgage company runs your credit, it has little to no impact on your credit score. And I'll take that further. If you speak to 10 mortgage companies, as long as it's within a 30 to 40-day window, it really, again, will have little to no impact on your credit. Now, if you go applying for a bunch of credit cards or personal loans, that absolutely will destroy your credit. So you don't want to do that if you can avoid it. So let's talk about the second part of this. There are 3 major credit bureaus in the country, Equifax, Experian, and TransUnion. And there are 3 different scoring models when it comes to credit scores. There is a scoring model for folks who are applying for credit cards or store charges. When I say scoring model, I actually mean the way they're computing your score. There is a second scoring model if you're getting a school loan, a personal loan, a car loan, a credit union loan. And there is a third scoring model if you're applying for a mortgage. So if you go to Credit Karma, you're actually getting a credit score for someone who is getting a credit card. So when I pull your credit, your scores are going to be different. I just want everyone to understand that distinction. What do you do if you've had a bankruptcy or foreclosure? You know, I've helped many folks, as you see, I've written the book on this topic. I've helped many folks who have had a bankruptcy, a foreclosure, or other credit situation get into a home and not pay high rates and put very little money down. So don't let that stop you either. Okay. Sometimes we have folks who say, you know, I'm renting because I'm not sure I can afford a mortgage payment. But, you know, there was an interesting statistic that Baltimore, and I covered this on Channel 11, Baltimore and Silver Spring, Maryland are in the top 10 cities in the United States of America where it's actually cheaper to own than it is to rent. Rents are skyrocketing. Home prices are going up, but rents are skyrocketing. So, you know, in the May, June, July, April, May, June, July time of year, you see people walking around with like silly looks on their face. You ever see that, Dani?
Yeah.
They got silly looks. And the reason they have silly looks is because they just got a big fat refund check. Okay. And I'm just going to preface this by saying that, Dani, I don't think you're an accountant or attorney, are you?
No, not that I know of.
Okay. And I'm not an accountant or attorney either. So we are not giving you accounting or legal advice. But check this with your accountant. You know, I have a lot of folks that say, you know, can't afford the payment based on what I bring home, right? So if you get a refund, you know, most people are really happy. They're walking around right now with that silly smile on their face. And I would tell you that you should be crying instead of being happy. So let me ask you a question. If you got back $3,000, would anybody here lend me $3,000? I'll hold it for a year and I'll give you back $2,500. Type in the chat box if this is a deal anybody wants. No takers.
I know my answer.
Okay, no takers. So why am I asking you a ridiculous question? Let me explain. The problem you have with getting a refund is that the government has had your money all that time, and people say it's forced savings. That's ridiculous. You wouldn't save and get less money back, would you? The government's paid you 0 interest. Inflation, if inflation's at 5%, think about it. Then every dollar you get back is only worth 95 cents. And you might buy a home less than what you're comfortable with because you don't have that extra money every month. It's your money, folks. So let me just show this to you. You know, the proper way to do this is to look at your budget, and you start the budget by saying, what do I bring home? Well, you bring home X dollars, right? And let's assume you got a $3,600 tax refund, federal and state. If you bring home, that money, and you have a car, you have insurance, utilities, food, entertainment, clothing, utilities, and let's say at the end of the day, you're comfortable paying $1,000, right? Well, if I gave you $3,600 back in your paycheck, every paycheck, extra $300 a month, well, logic says you could pay $1,300 and it would only feel like $1,000. That $3,600 is your money, folks. And the way you get that money back and stop the government from holding it is by changing your W-4 forms, state and federal. And you want to do it with guidance so that at the end of the year, you're not owing money, because no one likes to owe, right? And you're not getting money. It's a wash. So I hope that makes sense for everybody. Now, how would you like to own a home, have other people make your mortgage payment for you, generate large tax write-offs, and get an extra income? So, you could buy a 4-unit dwelling with only 3.5% down. And many of my clients actually who qualify for a 250 home are able to get into a $400,000 neighborhood doing this. If you're a veteran, you can get in with no money down. So let's just do a very simple example. Let's say that you buy a home and your mortgage payment is $2,000 a month, okay? And let's say you're going to live in one of the units, right? Your mortgage payment is $2,000, and you rent out units 2, 3, and 4 for $1,500 a month, right? So you're bringing in $4,500. Your mortgage payment is covered, so we're going to take $4,500. We're going to subtract $2,000. Do you know what you just did? You just generated no mortgage payment, because your rents cover it, and an additional $30,000 a year in income. And those other 3 units are treated as rental units. And so there potentially could be extra tax benefits to shelter that income. Dani, do you ever have clients come to you and say, gee, I want to buy a home, but I'm not sure if I really want to do an investment property first or my primary home first?
Sure do.
Yeah, I get that call all the
And
time.
I'm glad you brought this up. This is a perfect example of house hacking.
Mm-hmm. Yep.
And
Yep.
if people do this, like you said, it's extra income, and your tenants are paying your mortgage for you.
Yeah, it really is a beautiful situation, but I like to be fair. So I'm going to tell you the cons. The cons are you're a landlord. I mean, you do have to fix the other 3 properties, the other 3 units. You will have other people living in the same property, in the same building, but not everybody's got separate entrances. So really no different than living in an apartment. You will need to make sure that the property is owned correctly, and Dani will assist you with that. And you are now responsible for repairs, but think about that. You're living without having to make a mortgage payment, and you're getting additional income, and you're getting additional tax write-offs. Beautiful, beautiful, beautiful situation. And again, not a very flattering picture, but if you want to take a screenshot, this is something I covered on channel 11 on one of my segments. So there's a little URL there if you want to go a little deeper. So let's talk about the different types of lenders and which ones are better or worse. I said if you call 3 different lenders, you may get 3 different opinions. There is an independent mortgage banker. That's what we are. There are mortgage bankers that are bank owned. Let me explain that to you. I hear people all the time say, well, I bank with Wells Fargo, and I'm not picking on Wells Fargo or Bank of America or Truist or whoever, right? But they own a mortgage company. Wells Fargo owns a mortgage company. You know what they named the mortgage company, folks? They named it Wells Fargo Mortgage. Bank of America, PNC, they went into the mortgage business and they opened a company called PNC or Bank of America Mortgage. So there are bank-owned mortgage companies and there are independents. There are small banks and credit unions that will lend you their money. And then there are mortgage brokers. Mortgage brokers have no money. They're just going to place you with a particular lender. My experience in 37 years is that the mortgage banker has the most control over the transaction, the independent. Often the bank-owned mortgage companies, they have stricter guidelines than even FHA, VA, conventional. So there are FHA, VA, conventional guidelines, and sometimes these banks add to those guidelines and make it a little bit more stringent. Here's a misconception. If you walk into what, and again, I'll say ABC Bank. You walk into ABC Bank because you have a savings account, right? And you say, I'm going to go to ABC Bank because I bank there. They're not necessarily going to give you a special deal if you have $2, $3, $5, or $20,000 in your account. If you have 2, 3, 5, or 10 million in your account, they will give you a special deal because they will give you private banking. So you just got to be a little bit careful there. So again, these are, if you want to take a snapshot of this, these are the different types of lenders and what they do. It's always good to hear success stories. This is the Daily Record and the Baltimore Sun written some articles about me. Again, important for you to know who you're working with. And so I hope I've given everyone a little bit of a flavor of what's out there. And, I want to talk now about some of the biggest mistakes to avoid. Mistake number one, let me ask you all a really ridiculous question. Who here would give me $1,000 if I promised you in writing I'll never, ever give it back to you and I will torture you periodically? Anybody want that? Anybody? Nope. Okay. So let me explain why, again, I'm asking you a second ridiculous question. If you go out and find on your own and you find a home and you put in an offer, I can't even imagine this happening, to be honest. But if you don't get pre-approved first, here's what happens. You will have spent money for an appraisal. You will have spent money for a home inspection, maybe even a pest inspection. And if you don't settle on that property, you don't ever get that money back, and it's about $1,000. Is that right, Dani? Maybe a little more.
Yeah, absolutely.
So the first thing you want to do before you do anything, before you even look at a home, okay, you want to make sure that you are pre-approved so that you know what price ranges to look in. Dani knows what areas to take you to, and the money is just sitting there waiting for you. You have a program, what comfort levels, everything, and that means that we have looked at your income, your assets, we've run credit. We don't do your analysis or proctology exam, but we do everything else. And so we want to know all of these things so that we can get you pre-approved and the money is literally just sitting there waiting for you. And if you're doing this in a time where rates are going up, we can even discuss our rate lock protection program that will give you a rate lock cap. And if rates go down, give you the ability to get a lower rate. So all sorts of ways to protect you. Now, I want to explain pre-approved versus pre-qualified because it sounds like the same, right? But it's not. When you are pre-qualified, it means you spoke with a lender, everything sounds good, but they haven't verified anything and your loan has not been approved. So if you hear horror stories about things blowing up at the last minute, that's usually why. Okay. So you want to make sure you're pre-approved. Again, that means the lenders run credit. We've seen income and asset information. We've had conversations, and you are actually pre-approved. Here, if you want, I'm going to leave this up here for a second. These are the items that are needed for a pre-approval. And you might want to even add to that your driver's license. Now, this is my personal feeling. Working with an online lender, it's a mistake. And especially if you're a first-time home buyer, you really need folks who are going to help walk you through the process. And I like to give the example, if I have a tooth that's really bothering me and it needs to come out, I could do a YouTube video. I could watch a YouTube video and do it myself, right? But I probably prefer to go to a dentist. Yes, it'll be cheaper for me to do it myself. But I think it might be worth my investment to go to a dentist who's a professional and can actually help me. So it's the same thing. Going to an online lender, it has its benefits and it has its downside, but you really want to make sure that you're working with someone that honestly is going to get you over the finish line with the least amount of stress, the best pricing model, and also, working with you step by step to explain things. Again, doesn't matter what I say. Here are what some of the clients say. And it's important. What others say about you is very, very important. We talked about this, which is knowing your credit scores and why Credit Karma is not the best place for that. But I want to share with you also one of the biggest, most beautiful opportunities out there. People are always rushing to the beautiful homes. They like the granite. They like the this and the that. Well, the real opportunity out there right now is the ugly homes. So you want to find the ugliest home you can find in the best neighborhood you want to be in. Our company is the #1 lender in the United States for renovation loans, and we will lend you the money to buy the home and do the renovations. What does that mean? That means you can pick the granite, you can pick the cabinets, you can pick the appliances, you can pick the flooring, you can, really renovate the home to make it yours. And it's a tremendous, tremendous opportunity. Ugly, in my opinion, is the new beautiful. And not only is it the new beautiful, but usually when you buy an ugly house and fix it up, you will walk in with a lot of equity. It's a very, very smart move. So if you want to take a screenshot of this, if anybody would like to set up a free, no obligation consultation with me, don't hesitate. I'll be totally happy to assist you in any way I can. There is no commitment. We don't charge any money. And, it would be my pleasure. Dani, I'm going to turn this over to you.
All right. Well, you've definitely dropped a ton of golden nuggets to, definitely debunk some of these myths that people think. So now I think you should have a very good understanding of the difference from being pre-approved and not being pre-approved. If you're not pre-approved and you're out here shopping, you're really gonna, be spinning your wheels until you speak to a professional and know exactly what you're working with. So thank you, Brian. I am so appreciative for all of the information that you have shared with us today. So I guess next step, if you have any questions and you just want to, just have a one-on-one conversation, I am more than happy to speak with you, and you can contact me by calling me. My office number is 443-660-9229, or you can call or text me on my cell phone. That number is 443-829-6231. You can find me on social media also. Instagram is probably best. and that is Dani B_realtor.
All right. I thank everyone for being here. Dani, I thank you so much for having me. And again, we're here to help and assist. No charge, no commitment, and we're here to answer your questions and help you accomplish your dream of owning a home and help you along that journey. So thank you, everyone.
Absolutely. Thanks, everyone. Have a great one.